We back, part 2. We at section 11. 205 ILCS 67011 from chapter 17, paragraph 5411, section 11, books and records, reports. A. Every licensee shall retain and use in his business or at another location approved by the director such records as are required by the director to enable the director to determine whether the licensee is complying with the provisions of this act and the rules and regulations promulgated pursuant to this act. Every licensee shall preserve the records of any loan for at least 2 years after making the final entry for such loan. Accounting systems maintained in whole or in part by mechanical or electronic data processing methods which provide information equivalent to that otherwise required and follow generally accepted accounting principles are acceptable for that purpose. If approved by the director in writing. B. For licensees shall annually on or before the first day of March file a report with the director giving such relevant information as the director may reasonably require concerning the business or operations during the preceding calendar year of each licensed place of business conducted by the licensee. The report must be received by the department on or before March 1st. The report shall be made under oath and in a form prescribed by the director. Whenever a licensee operates 2 or more licensed offices, or whenever 2 or more affiliate licensees operate licensed offices, a composite report of such group of licensed offices may be filed in lieu of individual reports. The director may make and publish annually an analysis and recapitalization of such report. The director may fine each licensee $25 for each day beyond March 1st such report is filed. Source PA 92 through 398, effective January 1st, 2021. 205 ILCS 67012 from chapter 17, paragraph 5412, section 12 of the business. A. Upon application by the licensee and approval by the director may approve the conduct of other businesses not specifically permitted by this act in the licensee's place of business, unless the director find that such conduct will conceal or facilitate evasion or violation of this act. Such approval shall be in writing and shall prescribe the other businesses which may be conducted in the license office. B. A licensee may, without notice to and approval of the director, in addition to the business permitted by this act, conduct the following business. 1. A business, and I'm just correcting some stuff as I go. The business of a sale finance agent as defined in the Sales Finance Agency Act. 2. The business of soliciting or selling any type of insurance, provided that all such insurance transactions are conducted in accordance with and are regulated under the Illinois Insurance Code. 3. The business of financing premiums for insurance. 4. Making loans pursuant to the Financial Services Development Act. The director shall make and enforce such reasonable rules and regulations for the conduct of business under this act in the same office with other businesses as may be necessary to prevent evasions and violations of this act. The director may investigate any business conducted in the licensed office to determine whether any evasion or violation of this act has occurred. Source PA 90 through 437, effective January 1st, 98. 205, I redact 2000. 205 ILCS 670 12.5. Section 12.5, limited purpose branch. A. Upon the written approval of the director, a licensee may maintain a limited purpose branch for the sole purpose of making loans as permitted by this act. A limited purpose branch may include an automatic loan machine. No other activities shall be conducted at the site, including but not limited to accepting payments, servicing the accounts, or collections. B. The licensee must submit an application for a limited purpose branch for the director on forms prescribed by the director with an application fee of $300. The approval for the limited purpose branch must be renewed concurrently with the renewal of the licensee license, with a renewal fee of $300 for the limited purpose branch. C. The books, accounts, records, and files of the limited purpose branches transactions shall be maintained at the licensee's license location. The licensee shall notify the director of the license location at which the books, accounts, records, and files shall be maintained. D. The licensee shall promptly display at the limited purpose branch the address and telephone number of the licensee's license location. E. No other business shall be conducted at the site of the limited purpose branch unless authorized by the director. F. The director shall make and enforce reasonable rules for the conduct of a limited purpose branch. G. A limited purpose branch may not be located within 1,000 feet of a facility operated by an inter-track wagering licensee or an organization licensee subject to the Illinois Horse Racing Act of 1975, on a riverboat subject to the Riverboat Gambling Act, or within 1,000 feet of the location at which the riverboat docks. Riverboat docks. Source PA 90 through 437. Effective 1198. Effective 1198. Yeah. 205 ILCS 670 13. From Chapter 17, paragraph 5413, section 13, prohibition against taking power of authority. No licensee shall take any power of authority except to cancel any policies of insurance financed by the licensee as permitted by this act, and to receive either rebate of unearned premiums or lost payments. Source PA 90 through 437, effective 1198. 205 ILCS 67014 from chapter 17, paragraph 5414, section 14. Pledge or sale of note. No licensee or other person shall pledge, hypothecate, or sell a note entered into under the provisions of this act by an obligor, except to another licensee under this act, a licensee under the Sales Finance Agency Act, a bank, savings bank, loans and savings association. Oh, I said that wrong, like I'm dyslexic. I'll redact that. I'm going to read the whole thing. Section 14, pledge or sale of note. No licensee or other person shall pledge, hypothecate, or sell a note entered into under the provisions of this act by an obligor, except to another licensee under this act, a licensee under the Sales Finance Agency Act, a bank, savings, and loan association or credit union created under the laws of this state or the United States, or to other persons or entities authorized by the director in writing. Sales of such notes by licensee under this act or other persons shall be made by agreement in writing, and shall authorize the director to examine the loan documents so hypothecated, pledged, or sold. Source PA 90 through 437, effective 1198. 205 ILCS 67015 from chapter 17, paragraph 5415, section 15, charges permitted. A, every licensee may lend a principal amount not exceeding $40,000 and may charge, contract for, and receive thereon interest at the rate agreed upon by the licensee and the borrower, subject to the provisions of this act. B, for the purpose of this section, the following terms shall have the meanings ascribed herein. Applicable interest for a precomputed loan contract means the amount of interest attributable to each monthly installment period. It is computed as if each installment period were 1 month, and any interest charged for extending the first installment period beyond 1 month is ignored. The applicable interest for any monthly installment period is that portion of the pre-computed interest that bears the same ratio to the total pre-computed interest as the balances scheduled to be outstanding during that month bear to the sum of all scheduled monthly outstanding balances in the original contract. Interest-bearing loan means a loan in which the debt is expressed as a principal amount plus interest charged on actual unpaid principal balances for the time actually outstanding. Pre-computed loan means a loan in which the debt is expressed as the sum of the original principal amount plus interest computed actuality in advance, actuariality, actual, actuarially, actuarially. Pre-computed loan means a loan in which the debt is expressed as a sum of the original principal amount plus interest computed actuarially in advance, presuming all payments will be made when scheduled. Oh, what happened? Too much. I think I was on E. All right. C. Loans may be interest bearing or pre-computed. D. To compute time for either interest bearing or pre-computed loans for the calculation of interest and other purposes, a month shall be a calendar month, and a day shall be considered 1/30th of a month when calculation is made for a fraction of a month. A month shall be 1/12th of a year. A calendar month is that period from a given date in one month to the same numbered date in the following month. And if there is no same numbered date at the last day of the following month, when a period of time includes a month and a fraction of a month, the fraction of the month is considered to follow the whole month. In the alternative, for interest-bearing loans, the licensee may charge interest at the rate of 1/365th of the agreed annual rate for each day actually elapsed. E. With respect to interest-bearing loans, 1. Interest shall be computed on unearned principal balances outstanding from time to time for the time outstanding until fully paid. Each payment shall be applied first to the accumulated interest and the remainder of the payment applied to the unpaid principal balance, provided, however, that if the amount of the payment is insufficient to pay the accumulated interest and unpaid interest continues to accumulate to be paid from the proceeds of subsequent payments and is not added to the principal balance. 2. Interest shall not be payable in advance or compound. However, if part or all of the consideration for a new loan contract is the unpaid principal balance of a prior loan, then the principal amount payable under the new loan contract may include any unpaid interest which is accrued. The unpaid principal balance of a pre-computed loan is the balance due after refund or credit of unearned interest as provided in paragraph F, clause 3. The resulting loan contract shall be deemed a new and separate loan transaction for all purposes. 3. Loans may be payable as agreed between the parties including payments at irregular times, and in unequal amounts, and rates may vary with an index that is independently verifiable and beyond the control of the licensee. 4. The lender or creditor may, if the contract provides, collect the delinquency or collection charge on each installment in default for a period of not less than 10 days in an amount not exceeding 5% of the installment on installments in excess of $200, or $10 on installments of $200 or less, but only one delinquency and collection charge may be collected on any installment regardless of the period during which it remains in default. F. With respect to pre-computed loans. 1. Loans shall be repayable in subsequently amount. I redact it. 1. Loans shall be repayable in substantially equal or consecutive monthly installments of principal and interest combined, except that the first installment period may be longer than 1 month by not more than 15 days, and the first installment payment amount may be larger than the remaining payment by the amount of interest charged for the extra days, and provided further that monthly installment payment dates may be omitted or accommodate borrowers with reasonable seasonal income. 2. Payments may be applied to the combined total of principal and pre-computed interest until the loan is fully paid. Payments shall be applied in the order in which they become due, except that any insurance proceeds received as a result of any claim made on any insurance, unless sufficient to repay the contract in full, may be applied to the unpaid installments of the total of payments in inverse order. 3. When a loan contract is paid in full by cash, when any loan contract is paid in full by cash, renewal or refinancing, or a new loan, 1 month or more before the final installment due date, a licensee shall refund or credit the obligor with the total of the applicable interest for all fully unexpired installment periods as originally scheduled or as deferred, which follow the day of prepayment, provided if the prepayment occurs prior to the first installment due date, the licensee may retain 1/30 of the applicable interest for the first installment period of 1 month for each day from the date of the loan to the date of prepayment, and shall refund or credit the obligor with the balance of the total interest contracted for. If the maturity of the loan is accelerated for any reason and judgment is entered, the licensee shall credit the borrower with the same refund as if prepayment in full had been made on the date the judgment is entered. 4. The lender or creditor may, if the contract provide, collect the delinquency or collection charge on each installment in default for a period the lender or creditor may, if the contract provides, collect the delinquency or collection charge on each installment in default for a period of not less than 10 days in an amount not exceeding 5% of the installment on installments in excess of $200 or $10 on installments of $200 or less, but only one delinquency or collection charge may be collected on any installment regardless of the period during which it remains in default. 5. As you see, they all broke up, so I'm trying to put it together as I go. And plus, my eyes heavy. And it's what time it is? It's probably close to 6 in the a.m. in the rising, or what they call the morning. 5. If the parties agree in writing, either in the loan contract or in a subsequent agreement, to a deferment of wholly unpaid installments, a licensee may grant a deferment and may collect a deferment charge as provided in this section. A deferment postpones the scheduled due date of the earliest unpaid installment and all subsequent installments as originally scheduled or as previously deferred for a period equal to the deferment period. The deferment period is that period during which no installment is scheduled to be paid by reason of the deferment. The deferment charge for a 1-month period may not exceed the applicable interest for the installment period immediately following the due date of the last undeferred payment. A proportionate charge may be made for deferment for periods of more or less than 1 month. A deferment charge is earned pro ratio during the deferment period and is fully earned on the last day of the deferment period. Should a loan be prepaid in full during the deferment period, the licensee shall credit the obligor a refund of the unearned deferment payment charge in addition to any other refund or credit made for repayment of the loan in full. 6. If 2 or more installments are delinquent 1 full month or more on any due date, and if the contract so provides, the licensee may reduce the unpaid balance by the refund credit which would be required for repayment in full on the due date of the most recent maturing installment in default, thereafter, and in lieu of any other default or deferment charges, the agreed rate of interest may be charged on an unpaid balance until fully paid. 7. 15 days after the final installment is originally scheduled and deferred, the licensee for any loan contract which has been previously been converted into interest bearing under paragraph F, clause 6, may compute and charge interest on any balance remaining unpaid, including unpaid default or deferment charges, at the agreed rate of interest until fully paid. At the time of payment of said final installment, the licensee shall give notice to the obligor stating any amounts unpaid. Source PA 93 264 effective 1/1/04. 205 ILCS 670 15A from chapter 17 paragraph 5416. We'll come back to that whenever we'll come back.